W3, so we're already at monthly OPEX. As we go into monthly OPEX, I want to let you know that our all-time high monthly settlement price is still the one from September. In October, we blew it and we were selling off and we couldn't make a new all-time high settlement. The all-time high settlement in September was like 44.64, something like that. In other words, more than 200 points below us. So unless we're going to sell off 200 points here this week, we're going to make a new all-time high settlement. So kind of keep that in the back of your mind before you get sucked down into the bear cave too far this week as the week wears on. Okay. Hope that made sense. Anyway, let's start off with a look at the intraday chart because it was kind of funny what happened this week. On Wednesday of the week we just traded, we came out of the gate. We tried to fill a gap to Tuesday's close all the way up at 46.85 and change. We looked below it and failed. Couldn't make it up and close that gap. We consolidated for about an hour and then we rolled over and we sold off more than 50 points. We made a low for the week down at 46.30 and change, breaking down below the 10-day simple moving average, breaking down below 46.50, and then tried to bounce off of that low into the close. Because on Thursday we had Veterans Day holiday, banks in the bond market were closed. We came out of the gate on Thursday with a gap up open, but hit a wall of resistance at the 46.60s, way lower high below what had happened on Wednesday. And we sat in this really small range between about 46.64 and 46.50 all day. At the end of the day, we started taking little looks below 46.50, tried to make a sell-off happen into the close, made a low of the day down at 46.48 or something like that. Yeah, here was Thursday's low, and closed just off of that at 46.49. I thought that really looked ominous. I thought that looks like we were going to have a real nasty day on Friday, that we were going to break down and maybe sell off below Wednesday's low for the week. But no, we came out of the gate with a little gap up open. We came down, did not fill the gap all the way to Thursday's close, so kind of like the bullish opposite of what had happened to us here on Wednesday. We held a low of the day at 46.50. The 80 handle rule teaches us not to bet against that. When you see that happening, a look above the gap and reverse bullish action here. And then we came up, and as we got into the 11 o'clock hour, as we got into the European close, we busted out over the initial high of the day, over the 10-day simple moving average. And I said if we got above Thursday's high here at around 46.64 to 65, that the target would be 46.85 to 86. That was the target back here on Wednesday that we failed to make and sold off from. And sure enough, what do? We wound up right back up here. We filled that gap to Tuesday's close, took a look above it and fell back, but still closed the week out above 46.80. And closed the week out above the 10-day simple moving average. So they being players or whoever is in charge around here, they did not want to have us set a weekly close going into OPEX below that 10-day simple moving average. We closed below it on Wednesday and Thursday, but we could not get that weekly close below it. In fact, we made a weekly close above 46.80. I'm sorry, but this likely means that we're going to take another shot at 4,700 come Monday. All right, so let's talk about this fork chart. This is what our simplified daily chart has turned into. I've been giving you this bear fork, and we keep moving the third point on it as we set our highs. And it has worked beautifully to show us where we are topping out. However, I thought it might be prudent to throw the bull fork on here, and so therefore I did what I usually do. I take the last swing before the one where the bear fork starts out, and start at bull fork. So back here at this double bottom low that was made in May, up to the high in September, down to the low in October, and it projects out. And if I had just drawn this back here when we made the October low, we could have seen where the breakout point was over the median line, and that we were gravitating towards the top of the fork. Well, here we are. We never quite reached the top of the bull fork, and for now, the top of this bear fork is working for us. Okay. Let's take a closer look at this chart. On Friday, I let you guys know that the top of this bear fork is about 47.10, and as you can see, it's a falling line. It's falling a couple of points a day. On Monday, it's going to be down to about 47.8 and change. And then on Tuesday, it'll be about 47.06, 47.05 and change. Okay, so it's going to get easier and easier to break out of this bear fork. And if we break out of this bear fork, our target goes back to getting to the top of the bull fork. And let me tell you this, the top of this bull fork is about 47.55 to 56 and change starting on Monday and rising as the week goes on. Okay, so when you look at these highs here, you can see how here is the high, our current all-time high. That set us up into this bear fork, and you can see how we get the lower high against this and a lower high that didn't even bother to try and reach the top of this fork. And here we are breaking out again, working our way towards the top of this fork. If we fail like a brick wall in the low 4700s, it's us hitting the top of this bear fork. And I think if we take one more swing at it and fail again, then we're looking for a move back down here, ultimately to the median line of this bear fork by way of the median line of the bull fork. Okay? So this gives us a great line in the sand here. If we break out of this, then we're looking for a November OPEX that's going to be going the distance. Man, we're probably going to be looking at some kind of a move that's all the way up here at, going into a new cycle of the 80 handle rule, the 4750s, the 4760s, the 4780s, and finally 4800. Okay, so that is a great set of lines here that we can use to judge whether we're going to break out and move higher or fail and pull back. And when we look at the roadmap now is best used for when we are pulling back and looking for our ultimate entries into the options, because you want to have as flawless an entry as you can into an option to make your best money on it. And right now, if we come out of the gate and look above Friday's high, we're probably going for those 4700s. And then we look to that other chart to see if we're going to top out at around 47.08 and change on Monday. That means we're hitting the top of that bear fork and we pull back. And if we get back into Friday's range, we're looking for a move to test and hold the 10-day simple moving average. And if that breaks, then we're looking at Friday's low, Thursday's low, and then finally the low of the week we just traded. And then our 20-day simple moving average is moving up on our tail very quickly. So we really use the roadmap to sort of look at where we are and where we want to judge, the option entries that we want to make. Ultimately, we have our simple moving averages and our gaps and our important levels noted on here. So the roadmap really helps us on the downside and on the dips where we want to buy our options for the S&P. And then finally, let's take a quick look at the options. I told you that our all-time high monthly settlement price, that's marked here on the roadmap, that was 44.64 and change, and we are now to about 220 points above that as of Friday's close. So are we going to pull back 220 points and break this, or are we going to just kind of consolidate this week, maybe move up, maybe hit the top of that bear fork, but still make a new all-time high monthly settlement, and then next week make that choice of breaking out over the top of that bear fork and going on, or pulling back. Here are the November options. Big volume in these 4,600 puts, which held the $5 window on the close Friday. Maybe this is a sign we are going to pull back. But if we start pulling back and you see volume rise here at about 46.25 and we can't really make any kind of a meaty move down, I'm pointing over onto the right here to the roadmap, and we can't break down below the low that we set on Wednesday's sell-off, and you see volume moving into these low 4,600 strike puts, those are players hedging out, selling against whatever strikes they have open down below so that they make money and they don't lose money on the options that they've had open. And by Monday at the end of the day, you really want to be done with these monthly options. If you get yourself into one and you want to hold it overnight, one more night into Tuesday, go for it. That's fine. But on Tuesday, if you're coming into the day flat with nothing open, you really should look at the Friday end of the day options, because then you have the flexibility to hedge these. They trade all the way through the end of the day on Friday. Whereas, with the monthly options, those only trade through the end of the day on Thursday, and you get what you get on Friday's open and settlement. So if you're in some kind of a short call spread and it settles way above you, you're on the hook for that. And same thing with short put spreads. You know, if you're following along these short put spreads and it goes against you, you have no control over it. Whereas if you were over here in the Friday end of the day ones, you have the whole day to fix your mess and figure out what you're going to do. Okay, so a little lesson to be learned there on S&P 500 options and the weird way the monthlies expire. There's a whole blog article about that. If you still have no idea what I'm talking about after all this time that you've been a member of this private account and seeing these videos, go read that blog article and learn about monthly OPEX on the S&P. Have a great rest of your Sunday. I hope this video helped you out. As always, good luck and good trading.